Joining us today is Nauman Hassan, Regional Director for MENA at Paymentology, to discuss how the rapidly growing MENA Fintech market is shaping the future of digital payments and the infrastructure driving this transformation.
Again, diving straight away. So I think the investment, first of all, is a strong endorsement of where the payment infrastructure is heading. I believe that it's not a capital to sustain the growth, but rather a capital raise to accelerate the transformation. Now, if we look back, I mean, for years, issuing processing, I mean, it sat quietly in the background. Today, it has become a very strategic infrastructure. Literally every bank, every fintech, every wallet, marketplace, and increasingly every enterprise embedding financial services need an issuing processor, right? The issuing processor that they require should be fast, resilient, secure, and more importantly, it should actually help them to scale globally. Now, this is where Apple's partner and Aspirity partners recognized they just didn't invest in Paymentology, they invested in the long-term growth of a modern payment infrastructure. So for us in the Middle East and North Africa, the timing couldn't have been better because the governance or the government rather are driving ambitious digital economy agendas. Regulators are encouraging innovators. The banks are replacing legacy systems with cloud native platforms. I mean, we as Paymentology we have literally seen that firsthand. We are supporting a lot of banks, a lot of fintechs, and the digital first issuers across the region. So, in a nutshell, I would say that this investment allows us not only to deepen our roots within the region, but also expand our horizon when it comes to product capabilities, and also help our customer to launch more innovative products much faster into the market. Look, this is a very interesting question because, in my opinion, look, infrastructure is ultimately built on the trust, right? So the banks are not just buying software; they're buying resilience, confidence, and long-term partnership. So when a bank selects an issuing processor, they're actually making a decision that can last for 10 years or more, right? So that's where a processor becomes a part of the bank's core operating model. So the bank will naturally ask you tough questions, right? For example, will this company continue investing? Is this company financially resilient, or can it support our growth? Now, having partners like Apple and Aspirity answers a bulk of those questions before we actually get into the technical deep dive sessions. So, plus, I think across GCC, the regulators, what we are seeing, are placing great trust and emphasis on processors that have operational resilience and technology governance, right? So strong backing of such institutions reinforces that we are not simply software providers, but we are a long-term strategic infrastructure partner. Look, you have raised a lot of products that are pretty much the talk of the town, but I think each addresses a different need, right? When you talk about tokenization, it has already become a norm. Look, as a consumer, I expect to receive a card, a virtual card instantly, and then I will be able to provision it in Apple, Google, Samsung, whatever wallet. Now, this technology or this experience, in my opinion, is no longer the differentiator, right? It is something that is expected. As a consumer, I expect this to be, a standard functionality. When you talk about stablecoins, another, I would say, exciting areas, particularly here in the UAE, where the regulators are creating a very credible framework, I would say, for innovators. Now, in my opinion, the first large-scale use case of stablecoin will not be a consumer going and buying a coffee, but I think it will be more about the enterprise because the real value lies in cross-border settlement, treasury management, merchant settlement, movement of money internationally, and much more. In fact, movement of money internationally in a very efficient manner. So this is as far as stablecoin is concerned. The last thing that you raised was about AI, and I think AI is probably the biggest long-term opportunity. Because literally it is improving every phase of the journey of issuing lifecycle, right? From fraud detection and dispute automation to customer servicing and operational intelligence. So I think in the next few years, we won't see AI as a very standalone product, but I think it will simply define how modern issuing processors operate. I always say that the best AI is the AI that the customers never notice. Yeah, it's a very interesting question because every market is very dynamic. But if you talk about Saudi Arabia, it is unquestionably the scale story, right? Whereas if you talk about UAE, I would say it is a innovation laboratory, right? So I would say the UAE innovates, Saudi industrializes, and the rest of the regions are literally accelerating faster than many of us realize, right? So when I say UAE is a laboratory, I mean look at it. I mean any new payment model that is going to emerge, be it digital banks, embedded finance, tokenization, AI-enabled banking, or maybe regulated digital assets, right? It usually appears in the UAE first. Then what we see in the Saudi is it actually demonstrate how those innovations can scale nationally, which is a big asset. And this is what we are witnessing. The market that I think we should not underestimate is Jordan. Exceptional talent, engineering talent, progressive financial institutions, and I would say a very rapidly maturing fintech ecosystem. I mean, fintech, MENA Fintech Association just had the Jordan seminar. It was great. I would also focus on few emerging markets. I would say Pakistan and Egypt. Why? Because it has enormous long-term potential. You look at the population, Pakistan population 240 million, Egypt population 120 million, young population, right? And people are really hungry for innovation. Everyone has a smartphone, and the governments are also putting efforts in accelerating the financial inclusion. So I would say it's just the beginning of what's possible there. Look, we have been following and contributing into Saudi's Vision 2030. Amazing, I would say, initiative by the government and reaching 80% cashless payments. I would say remarkable milestone. But digital payments or digitizing payments, I would say it was just the first chapter, right? The next race isn't about going digital. I think it's about going intelligent. So by intelligent, I mean financial service intelligence, right? So we are seeing banks that are moving, I would say, simply beyond issuing debit cards towards more or less real-time credit decisions, programmable spend controls, virtual cards, embedded finance, AI customer, and AI-driven customer experiences. So, I mean, supporting all those initiatives, all those innovative products requires a level of flexibility, a level of cloud native issuing infrastructure. And I think the legacy processors, to be honest, are not designed to evolve at that pace. Look, I would definitely, before answering this question, put my consumer hat on. To be honest, let's face it. I mean, customer don't think in payment rails. They don't care whether it is RTP, whether it is a card network or an account to account rail, right? As a consumer, the experience that they want, or they simply, expect money to move instantly and securely. That's the bare minimum, right? So I think the issuer processor plays a very vital role in providing that experience because when funds arrive in real-time system, I mean, we as a processor, we are ensuring that it hits the rails. I mean, the balances are immediately, reflected. The cards can become instantly usable. The fraud controls are applied in real time, and the customers are receiving notifications instantly. So basically, you're providing the power on the fingertips of the consumer. This is what I always say. So in a nutshell, I would say we connect movement of money with the customer experience. So customers really don't care about money, how the money moves. What they really care about whether the experience is good and whether it moves instantly. So this is what, in my opinion, matters really to the consumers. That's very interesting because paymentology is global, and yeah, we have quite a lot of experience in launching card programs, not only regionally but globally. So it's a sales skills story that I always say. So the hardest program, in my opinion, probably aren't necessarily the biggest. Probably they're the most interconnected, right? So I would say payment is less about coding and more about coordination. So when you're launching a card program across multiple regions, multiple regulators, multiple card schemes, plus the domestic schemes like J1, MADA, JONET, Himyan, and you just name it, right? And there are digital wallet, tokenization, multiple cloud hosting infrastructure, all at the same time. So that's where I would say technology is only one part of the challenge, right? The real complexity is coordinating with the regulators, with the bin sponsor, the banks, the schemes, the implementation partners, and all that, maintaining the flow, maintaining the speed and compliance. So this is what, in my opinion, is the toughest. If you manage to coordinate well, if you are experienced, then I think you're definitely moving towards success. You know what? I'm going to start by giving you a statement that I recently used, right, in one of my conversations. So I always say that the cheapest processor is often the most expensive decision, right? So if I summarize, in my experience, the client is usually asking for three things. The first one is go to market. It's important. You know, how fast can you help us to launch? Question number one. Number two is compliance. Can you keep the compliance wherever we operate, whether it's local, how localized you are. Coming from an international company, you have to respect the local norms, right? So you need to be on the top. Then number three, it's a scale story. Can you support us or our business in the next 5 years without forcing any other migration? So, and plus, can you move internationally? How can you scale us? So these are few of the questions that matter far beyond, I would say, the marginal price differences. Because I mean, whenever you open the word migration, it's not easy. Replacing a processor is one of the most difficult technology projects that a bank can actually undertake, right? That's why you have to choose the pillars, right? You have to choose what you are going ahead with. The ecosystem should be perfect, and that's why customer increasingly are choosing partners that can enable a long-term growth rather than simply delivering today's requirements. So it's the vision that you need to employ, and you need to really look at proven providers or proven vendors. So, embedded finance, firstly, the embedded finance should not feel like a finance. That's very important, right? So, and when I say that, it means embedded finance works when financial institutions actually are removing the friction rather than just adding features after features. So you should actually tackle a genuine customer problem. That's very important. So we are seeing a lot of adoption, in all honesty, across expense management, SME platforms, payroll, marketplace, and cross-border commerce. So if you take example of UAE itself, I mean, company like Mamo, company like Zena, and all the other new expense management platforms are showing how integrated financial experience can simplify the way businesses operate in general, right? So where embedded finance struggles, I would say, is when organizations are launching the card program because they just want to follow everyone else, right? They don't have a real world business use case. They're just following the trend. So I think you need to understand the scope. You need to have a very clear-cut vision and then work your way towards solving a genuine customer problem. I would say a lot of them. I just mentioned few. I just mentioned few expense management system, SME financing platforms, and many more. So I would say if you look at the likes of mobility, the likes of Careem, the likes of Uber, or maybe if you're ordering grocery through Talabat or maybe through Noon, all of them are embedded finance examples. So basically, you're providing convenience to the consumers. You're providing, like I always say, I did mention this to you earlier, that you're providing options at the fingerprints. You're bringing shopping closer to the consumers. So you're helping not only the consumers, but also the businesses to operate in a more efficient fashion. So all these are examples. And I think um, with financial technology companies and the banks, the gap closing between the both of them, ultimately the consumers and the businesses will benefit. I think I did touch this point earlier. I again, just to recap, that I don't expect or I don't believe the first large scale production use case will be retail. It will probably be enterprise. So, and plus, one myth that I want to basically eradicate or remove here is that in my opinion, stablecoin won't replace cards. They will make them significantly smarter, right? So when I say the enterprise, again, just to mention or just to recap, it's going to be cross-border settlement. It can be corporate treasury. It can be international supplier payments. It can be merchant settlement. So these are the areas where stablecoin solve genuine operational problems by reducing costs, settlement time, and complexities, right? So I mean, cards then become familiar consumer interface that allows those funds to be spent anywhere traditionally where the acceptance exists. So this is how it's going to be. It's going to be a combination. From a acceptance level, card is definitely going to play a role, whereas the settlement part, you can always, provide that option to the consumer to either do it on conventional rails or maybe on stable coins. These days, no discussion is complete without AI. But one thing that but we should realize is that AI shouldn't create complexities. It should make things simple. It should quietly remove the complexity. So this is very important, right? So everyone is talking about AI. That's fine. But the real question is, where is it delivering measurable outcomes? You did mention about paymentology. I can straight away mention how we are using AI. So for us as a financial in the financial issuing landscape, for us it's more about fraud prevention. It's about operational intelligence, dispute automation, customer servicing, predictive analysis, and so on and so forth. So over time, I think the AI will help the issuers to predict the customer needs rather than reacting, right, to it. So it will be very proactive, and the data that we will be getting will definitely help us to understand the spend patterns, understand the behaviors, provide them. When I say them, provide the consumers very personalized products. So that's where Paymentology is focusing on. So customers in general, I would say, won't notice the AI, but definitely they will notice the advantages that AI is bringing in. They will see reduction in the frauds, the disputes are resolved faster, and overall the banking experience will look more seamless. I would say I wish I'd realized earlier that technology alone really wins, right? So it's all about, I mean, this region is all about relationship, right? It's about trust, it's about consistency, especially people need to realize that in the MENA region, business is built over years basically, and not in quarters. So it takes long term to build that reputation, to build that brand. I always say that before any meeting, your reputation enters the room. So that's important. And also, in terms of technology, yes, it will help us to open the door, but trust actually keeps the door open. So these are the two important parts. So I would say the strongest partnerships that at least I have seen were not created by someone who had the best of the best, sharpest of the sharpest presentations, but obviously they were built because the organization consistently delivered on their promises. It's all about trust. It's all about the brand. It's all about making sure that you act as partners rather than just vendors and clients. When you say importing most of that capability, I mean, most importantly, what I believe is MENA now is no longer importing innovation. We are increasingly exporting it, right? So we have made enormous progress from that perspective. We are seeing world class engineers. We are seeing talented product managers, founders emerging across the region. You can see how many startups are in the market. So I always say that the soil is very fertile, right? There's a lot of investments. There's a lot of risk-taking appetite as well, in fact. One thing that I would like to see, I won't say it's a big gap or a big void, but I would like to see deep payment expertise, because payment expertise or payment is a language of its own, right? So it's one of the most specialized discipline in financial technology, and it takes time, it takes experience to build. And honestly, if you look at a lot of financial institutions, they have their programs to train. And plus, even if you go to universities here, right now, you can see majors in financial technology, which is great to know. And we as Paymentology will definitely invest on such talents. But coming back, I mean, the encouraging part is that we are seeing a lot of development in the capability locally, rather than relying entirely now on imported expertise. It's a very positive sign, and it's a sign for a long-term maturity of the ecosystem. You started the conversation with the race, so I would probably, try to end it with that. So, if I look back, I would definitely like to see this investment translate into tangible outcomes, right? I would say more banks launching faster, more fintech scaling internationally from the region, more innovation, more products. We spoke about so many products, stablecoins, AI, and tokenization. I would like to see more. And more regional talent erupting. And at the end of the day, customer building products that are simply were not possible on the legacy infrastructure, right? So I would say the success ultimately won't be measured by the amount we raise, right? It will be measured by the innovation that this capital enabled. So um, if I talk about the capital, probably I would finish by saying that, look, capital creates opportunity, but it's the execution that creates an impact. So this is my take. If I look back, yeah, yeah. Look again. My message is very simple. I mean, we are entering into one of the most exciting periods in the history of financial services across MENA. So the regulators are very progressive. Governments are very ambitious. There are world-class entrepreneurs. There is increasing investments, and financial institutions are actually willing to innovate, right? They're willing to walk that extra mile. They're willing to take the risk, right? So the conversations are no longer about catching up with the rest of the world. Increasingly, I would say the region is helping to define how global payments operates, or where it is heading. So, I mean, at Paymentology, we are really proud that we are using our infrastructure to enable the banks, fintechs, and the enterprise to innovate faster, scale with confidence, and deliver financial experiences to the millions of people. So, the future, I would say, of the future of payments won't be built by the biggest institution. It will be built by those who are having the courage to innovate faster. So it's all about the risk-taking appetite, and you have the environment. And yeah, I would definitely encourage everyone to keep innovating. So that's my message. One thing that I always say, and I remember from way back. Something that I read was, as you advance in life, you define the limits of your capabilities. So keep your eyes open, look at what's happening, take the risk, and keep innovating.